Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Monday, June 14th. Great to have you here as we start another week. I'm your host, Jesse Allen. Thanks for joining us. Find us online, markettalkag.com. That is our home on the web, markettalkag.com. Find us on Facebook, Twitter, Instagram as well. All our social media links are there. Our YouTube channel, all our streaming sources, and more, markettalkag.com. Well, we came in Sunday night with a hard sell-off that continued into Monday, especially in quartered soybeans with updated weather forecasts and just a lot of things to talk about in this market trade. A lot of volatile action here to start the week. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here this afternoon. And Bryan, great to chat with you. And, looking at the Sunday night open, had a feeling it was going to spill over into Monday, and that was the case. Just a rough day with a lot of selling pressure, especially in that quartered soybean market here on Monday.
Yeah, let's start with that. Yeah, it was a challenging start to the overnight. I think most farmers were anticipating to jump higher. There were some private firms that were talking 5, 10, 15 higher, predicated on the weekend weather, lack of rain, kind of the bust of rain late Friday that we saw dissipate on the radar, and so many people needed some moisture and some pretty rough looking fields for sure. A change in the forecast on the extended that hit the market. That was one, not the 6 to 10 day, but more the 8 to 14 and overlap a little bit there. The cooler temperatures, so a little bit of a change from sort of this inferno that some have been experiencing here. And then I think the kind of the wet rag over the market, though, really was the news Friday that the Biden administration is considering changing something with the ethanol waivers. It almost seems political nature. Just one article I wanted to, just a quote, the issue pits the two administrations' important political constituencies against each other, blue-collar refinery workers and farmers who depend on biofuel mandates to prop up a massive market. So that wasn't the kind of news the market needed on Friday, and then the change in the forecast. So we're down 28.5 on December's close today. Jess, that's in D's corn. It looks like we have to keep things in perspective. We were still over $6 at the end of last week. So $6 corn, let that resonate for a while. So this could be, time of year where if this weather changes, that disappears pretty fast.
Very, very true. And, we talk about that, and I want to hone in on the Biden, the biofuels thing a little bit first, because I'm glad you mentioned that. I think that was just as big a story as the weather, if not maybe even a little bit bigger. And, it's going to be a matter if we figure that out here and find more details out about it. But something like that, a policy change like that, Bryan, coming down the pipe, especially on a Friday, negative for agriculture. And I think a lot of folks really are watching that with concern, wondering what that could do to our demand here moving forward. And I think you're right. I think that was kind of a wet rag on the market today.
Yeah, and as far as like demand, trying to get your hands around that is just simply a guess. But reading some things and trying to kind of put a pencil to it ourselves, I don't know, maybe 200 or 400 million bushels of grind. I don't know. But it's always, it's not so much what the actual news is, it's the perception of the news. And the perception of the news is basically a 180 from the administration. So the question is, well, what does that really mean? And, does the administration looking and saying, hey, corn and soybeans are high enough priced, this maybe preserves some supply and we need to think about our energy partners, or is this just a political sort of balloon they're going to float and see where it hits? and who's more concerned or not concerned, I guess, let's put it that way. So I don't know, it doesn't set the right tone. And then, like I said, on Friday we saw the markets claw back and corn was like 5 or 6 lower, and so that wasn't really a big deal. I think the market was more concerned with weather, probably still is more concerned with weather, but you got a pretty big change in that outlook starting late yesterday afternoon.
And let's talk about that weather. And you and I were chatting before we got on the air here. There's a lot of areas that just need rain. You were out traveling. I've been traveling a lot recently. There's areas, and it's no secret now. I mean, a lot of areas of the Western Corn Belt pretty much are dry, need the rain. The subsoil moisture is not there. We're at that point where we need something to at least buy us some time because things are starting to turn. I'm seeing reports in Iowa, in Minnesota. Corn's looking good right now, but a few more days of this heat is not going to be good. We need to get some rains in there and subside the heat a little bit. And it's sounding like that forecast is going to do just that if it holds together here, especially getting into this weekend with a cold front expected to move through.
Yeah, you can buy a lot of time when temperatures aren't searing hot. The problem has been these hot temperatures, and they've just exasperated the moisture out of the soil. It's created just a real concern. You feel it; it's emotional, but maybe it comes in time. The reason I want to circle back, or I mentioned that we're still around $6, so 581 today. If today we were, everything's in perspective. If we were looking at a market that was up 28 cents today and closed at 581, we feel pretty happy about it. So let's focus maybe on the pivot point of 575, $6 corn. Where did this start from? And remember, back on March 31st, the market was considerably lower. December corn was trading near 450. So that's $1.30 away. That's when the market was expecting that you might see in acreage, an acreage number that would be 93, 94, 90, maybe 95 million. Came in at 91, noted. And that was the beginning of the rally. And then we got the dry weather in Brazil. Dry weather in Brazil is a fact that's reduced the crop, but we may still yet have 94, 95, 96 million acres of corn. And so we got to recognize that if this rain event does materialize, we could certainly see more. In the next 2 weeks, the news could be improved crop conditions, improved weather conditions, and bigger acres. Those might be your headlines. And you might hear more about this ethanol waiver.
So if I'm a producer right now, Brian, I'm going to throw this question to you because I've heard some talk. There's been plenty of producers who've made some marketing decisions. They've sold some. They've maybe got some puts or whatever the case is. They have a good marketing plan. They've been executing it. They don't feel like they've gotten too far, out in front of their skis with new crop marketings with the weather situation. But looking at this new forecast and the talk that we might get some more rain, I've heard some producers who really haven't marketed anything for new crop here at this point. So I mean, you hear a weather forecast that sounds like it could be improving in the 6 to 10 day, maybe getting us to a point where we can pretty much say we're going to have something, maybe not bumper crop. But I guess the question I have is, if I haven't done really any marketings yet, looking at this new weather forecast and the prospects that it could do to the market, what would be my strategy here right now?
Good question. So there's, I'll go this route. There is, in any year, there's what I would call a spectrum of sales. So you have sales, multiple sales. Usually, there's rare as the guy who just sells everything at one shot. But so realize that if you haven't made any sales to date, you've actually have been taking significant risk. And somebody should maybe ask you why you haven't made sales to date, because when you start calculating dollars per acre and those kind of things. So, but nonetheless, if you're in that group, it's time to get rolling. When don't you get started is my point. You're at the midpoint of June and you've got a forecast that's conducive to a crop that may have close to record acres. Prices have been high for a while. You may start to hear the high prices cure high prices and those type of things. So I would encourage anybody who's got crop that they at least feel confident in the stand right now where it's at. Gosh, get up to a level you're comfortable with, but get started for those who, as you said, don't want to get too far over their skis. They've already done the right things. They've sold rallies and then rallied more. Then they sold a rally and rallied more. And now they're afraid of, hey, maybe my 30% sold is really going to be 50, 60, 70%. Totally get it. You got to shift gears. If you want to defend the market, you've got to do something probably on paper. So look at those tools, talk to someone experienced, talk to someone who can help you with that, and have good conversations with the people in your management circle, particularly in this case, your lender, to say, hey, I want to floor the market. I want to buy puts, leave the top side open. This is what it's going to cost. Can we work with that? These are all doable. And so it's a matter of good communication and keeping on task and kind of moving away from it this time of year, moving away from, well, we'll just hope and see or see what happens and take it as it comes. You might miss some real opportunity to shift risk.
Well, Bryan, let's shift our conversation over to livestock. Cattle today really feeding well, no pun intended, with the feeder cattle market off lower corn prices today. That feeder cattle market took off like a rocket, supported the live cattle market. And, we saw some cash trade last week that was maybe a glimmer, a sliver of hope that it was getting a little bit better there. What are your thoughts on this cattle market moving into this week, especially after today's strong close?
Yeah, I was kind of liking the cattle market sort of running a marathon. You kind of speed up and slow down, but ultimately in the end, you head towards some direction. And I think what the big concern with the cattle market, obviously has been is just chain speed and getting, enough through that the demand we think is, out there. We're seeing a real recovery in a lot of things. And kind of remember markets and a lot of things, the sort of good times, euphoria, whatever you want to call it, happen in advance. So we've seen, the stock market take off. We've seen all this, well, the COVID is heading one direction. We're going to see this demand. By the time COVID's, let's say, really, really pushed down, if it is, you're already there in the demand. But anyway, my point is the cattle market's been a laggard, and for the cash industry, it's been strong on the opposite end because of tighter inventory. So what you should probably expect in this marathon is some slowdown or some reduction in cutouts and packer costs as we get more cattle through the pipeline, and then more demand for cash cattle. Probably the most interesting development for me, at least here this spring and summer now, is what does cattle country look like? It's been so dry in so many areas that are we displacing cattle and moving cattle elsewhere, or are we really wholesale moving some cows through the pipeline, moving some heifers you might normally retain through the pipeline and just reducing the herd? Probably a combination of both, but ultimately that provides underlying support for the cattle market, maybe less demand in the feed market for corn.
And that's a great point you make. I mean, we're drying on some of those areas, pastures are drying up. I mean, that's definitely a factor to watch here moving through the summer months, especially if we stay hot and dry in parts of cattle country in those ranches. And I still maintain the third and fourth quarter is going to be kind of that window for this cattle market here. But like you said, I love the analogy to it's a marathon right now in this cattle market, Bryan.
Yeah, it's always flowing, and yet, we do have certain cycles in the cattle market. It'll be just real interesting to see how we come out of all of this COVID. But if you kind of think of the dynamics of backing cattle up last year from a feed usage perspective, backed cattle and hogs up, they've been actually using more feed, right? So that's one element. The other element is dryness out in cattle country. What does that mean for the herd? So a lot of big variables out there. Worldwide, Brazil, Argentina, elsewhere, what's their supply availability to feed cattle? So I'm very optimistic in the cattle complex, very optimistic cattle market, and very optimistic we'll be, over time here, moving a lot faster into the whole pipeline of getting cattle pushed through.
On the flip side, Bryan, hog market under pressure here. Was under pressure Friday. We're seeing that again here today. I think the question everyone's asking, have we finally found the top, or is this just simply a correction, a healthy correction in a bull market? I think that's the two schools of thought right now. What are you thinking when it comes to this cattle market or to this hog market?
Hog
Excuse me.
market. Yeah, the charts say nothing more than and it's not even much of a correction on the grander scale. You've got this real what we call railroad tracks of parallel lines where the market's in a trend and higher highs, higher lows, kind of textbook. I don't know if we've really given the market a chance to really have a pronounced topping signal yet. July will now be the front month, but it looks to me like the limited supply. See, it all again, it goes back to, you might remember a year ago when we were euthanizing hogs, and somewhere it creates some shortfall, somewhere, somehow, most likely in the entire herd. So that's the reflection of it right now. So I've got to believe we're close to the peaking window, just on price, and I don't know if there's enough demand to sustain these kind of price levels. So if I'm a hog producer, I'm definitely looking at this July, this August, October. I know October's $20 discount, but I'm looking at those three contracts in particular to defend.
Well, I know as well with this hog market, something else that I think we're watching globally is the hog market in China. Their cash market was lower, and hogs are down more than 20% over the past 3 weeks, down nearly 60% year to date in China. So I would have to think that's maybe another underlying thing that we're watching, and how that affects our hog market here in the U.S., Brian.
Yeah, for sure. A lot of our hog market is predicated on export activity and sales, and those sales have come when supplies are tighter. China's building the herd, building the herd, building the herd. They've been buying a lot of corn. There's every signal or sign in the world that they'll be more self-sufficient in their hog production. So that is another thing to be very cognizant of, and you're starting to see the telltale signs, declining internal prices. So that reverts back to our market. Will we have that robust demand that we've seen the last year, the next year? I would argue not. That was really a function of a African swine fever event.
Brian, looking as well outside markets and just kind of wrapping up here today. Any other final thoughts or anything else you want to touch on for us here on this Monday?
We a lot of times visit on the dairy market, and not a lot of activity there lately. Just kind of hit the wall and just gone sideways in the wall, not positive or negative, just very tight ranges there. Probably are not going to see that sustain itself. So if I'm a dairy producer, I like that prices. They hit a high, sold off, they're consolidating, but I'm a little bit more concerned in the bigger picture that if corn prices do tip over, that the dairy herd, and it looks more confident that there'll be supply out there, the dairy herd isn't going to contract. It'll probably expand again. So that's just kind of a big picture perspective we want to watch there. Other things, I guess, to pay attention to, maybe keep an eye on the energy markets. They're trading near $70 a barrel. There's a report that came out a couple weeks ago from a private source, but they're talking, well over 100, maybe $200 crude, because you just can't get it online fast enough, or the rigs that went down, what have you. I think that's very speculative in nature, but the point of it is we've just come off of an all-time low price for crude oil. And now we're starting to see the world go back to some sort of normality, or trying to get there. So it may take a while for the energy. So anyway, my point is, if prices drop back, watch the market carefully. It's been a nice sustained uptrend, kind of peaking here at 70. If we get a drop back in the $60, $55 barrel range, that's probably an area where you want to start thinking about locking in longer term fuel needs.
Well, Brian, you mentioned it earlier, getting advice and getting help from folks you trust, or people who have the knowledge. And I know you and the team there at Total Farm Marketing have plenty of knowledge on the markets and the things that producers need to do and can do. And I know it's just as simple as reaching out to you and giving you guys a phone call to talk more.
Sure. And we'd love to. 800-334-9779. Again, that's 1-800-334-9779. Give us a shout. We'd love to talk to you, see how your crops look, or listen to your own pace of where you're at with marketing, and see if we can't supplement that or help you, or at least provide some pointers.
Well, you can give them a phone call. You can also find out more info online, totalfarmmarketing.com. Bryan, appreciate the time as always, my friend. Thanks for joining us. We'll talk to you next Monday. Thank you.
Yes, sir. My pleasure.
Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk, brought to you by GrowMark FS. Find us online, markettalkag.com. This has been the Monday, June 14th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.